to sort of focus on that debt because that's what I do. They have about $8.5 billion of debt from almost nothing not so long ago, and they have been really relying on credit markets. I am looking at their debt distribution, and you can see that the weighted average maturity is about 8 years. So they have some wiggle room, which gives them, a little bit of breathing space here. You can see that the biggest maturity comes in 2028. So, Paul, do you think that creditors will give them the benefit of the doubt even with this disappointment?
I think they will. I think the track record is there for this company, and clearly they are the dominant player in this business on a global scale. Not to say that there isn't more competition coming, potentially from a revived, larger Disney, as well as some local players internationally. But this is a company, it's about one quarter every year, every 5 quarters that they miss, and then we have the same conversation again about, is this kind of the top of the Netflix story? Yet they come back with a better subscriber number the next 2 or 3 quarters. So we'll have to see. I think, clearly the questions for management tonight on the conference call will be what really drove the lower than expected net adds this quarter and for next quarter, and what are you doing about it?
I also want to once again bring it to you, Romaine, and sort of the broader picture. If you look at NASDAQ futures, which I have on the Bloomberg right now, we've seen a pretty big hit here. Netflix, one of the top 10 weighted stocks in the NASDAQ 100. And so is this a sort of signal for the momentum stocks to come back to Lisa's
question? And not only was one of the most heavily weighted, but keep in mind, it was probably one of the more enthusiastically embraced stocks amongst that sort of batch at the top. I mean, a lot of the other ones had sort of not necessarily fallen out of favor, but you look at Apple and some of the other ones, there just wasn't that level of enthusiasm there. You had that with Netflix. You still have it to a certain extent with Amazon, which is obviously has a huge weighting. But without Netflix as part of this party, it's really going to be a bit of a drag. You look at what the market did today. I mean, we couldn't hold that 2,800 level despite this massive rally in financials. And you saw that there just really wasn't a lot of enthusiasm there. And I think a lot of folks were looking to kick off the tech portion of this earnings season tonight with a Netflix beat.
Yeah, maybe
and that's not going to carry over tonight.
On the
it's such an interesting point about, there's this broader sort of almost like ennui when it comes to, tech names right now and, sort of global mistrust in some cases and maybe some skepticism.
I got to say, Paul, Disney shares in aftermarkets trading up just a touch, which I thought was interesting. I'm surprised they're not up more. They're up about 20 basis points. But, it still is interesting. It shows, perhaps Netflix's loss will be the gain of the traditional media barons that have been really struggling in the face of Netflix.
Yeah, that's clearly what Bob Iger is betting literally the castle on is, really doubling down on content to try to go head to head with the Netflix of the world, whereas people like Rupert Murdoch and Jeff Bewkes at Time Warner have decided not to make that play, to throw in the cards and, to let somebody else fight that long fight over the long term. But Comcast and Disney think that they can compete against the Netflix of the world and the Facebooks and the Googles, and that's what's really playing out in the M&A space.
Paul, something else that Netflix brings up this quarter is currency fluctuations as it gains more and more of those international subscribers. Since it's not something that it has had to navigate in size for a very long time, how's it done so far, and how do you expect to continue to do on that front?
Generally, it's done pretty well. It hasn't been that big of an issue, as you mentioned, but clearly the vast majority of the growth for this company going forward, not just in subscribers, but in revenue and earnings, is really going to be outside of the U.S. and their costs are mostly U.S. dollar costs, although they do have some international production. So they really have to be increasingly good at FX hedging, like a lot of technology companies need to be. So that'll be something that will be impacting their numbers probably increasingly going forward.
I'm just wondering, Romaine, when we come in tomorrow, the Dow Jones and the NASDAQ indexes, do you expect them to respond to this, or do you think that this is just sort of light trading, summer hours?
No. There's going to be a response tomorrow, I think, unless, some other sort of upside bombshell comes out over the next 12 hours. But, I mean, Netflix was what was going to move this market, and that's not going to happen. I do kind of have one question, I guess, just posed to everyone that I'm curious about is the pricing issue and whether or not they have the leverage to raise prices and whether that could sort of make up for some of the...
Yeah, that'll be, I think that'll be clearly an issue on the call. To what extent did the pricing increases that they've had in certain markets over the last couple of quarters impact their subscribers? Historically, it has not, but, you never know. There's always a point for every product and service. Now, they will probably come back and say, listen, we're going to spend $8 billion in programming. People are getting a great value, but that's kind of the discussion we'll be having.
Yeah, and in terms of, just to put a pin in what Romain was saying as well, in terms of what's going to set the narrative tomorrow, I'm just looking at the earnings that are out tomorrow morning. There's not, I mean, yes, Johnson & Johnson's coming out and some and Goldman Sachs, but those aren't sort of
it's not enough.
Story setting.
And you've got Powell midday or mid-morning that a lot of people are going to wait on.
Yeah.
So, that this isn't the catalyst that we were looking for.